Welcome back to another edition of Zach's Rank Buy. I am Brian Bolin. I'm the aggressive growth stock strategist here at Zach's, and I got two more stocks for your aggressive growth radar screen. Let's get right into it. Not really a good theme this week, as I had a little bit of difficulty finding some good names, but Globalstar stood out to me. It's GSAT. It's a Zach's rank number one. That's a strong buy, and it's got an A for growth and an F for value. And you know from watching these videos that I love the growth and value divergence when the growth score is strong and the style score for value is weak. Then I know right away I'm on the right path. Value investors and growth investors are inherently looking for different things. All right, so it's a $3.3 billion company. It's in the satellite communications space. You know, we've seen a whole lot of interest in that sector. But this stock, you know, if I take this out over the year, it popped up back in November, but couldn't hold the gains after a couple misses. And now it's starting to get its footing again and moving back higher. And that's why I want to draw to your attention. So let's get rid of that. And then let's move on to our next screen, which is what we always look at first, is the numbers. Do the numbers tell a good story or not? All right, so this is actually an earnings meet. This is a miss and a big beat. So over the average works out positive because of this big beat. We're looking for a big loss, but we post a big gain. That's good. That's good to see. Let's take a look at the estimates. How have they responded since that big beat? Well, this number has moved up from loss of 6 to loss of 3. This number has also moved up from loss of 5 to loss of 2. This number moved up dramatically from a loss of 35 cents to a loss of 8 cents. And next year, we went from underwater to above water by a penny. That's good to see, investors. That's going to really drive some interest in the stock once that flip happens. Now let's take a look at revenue. We're only looking at 6% growth this year, but next year that number triples to 18% at $315 million. All right, so let's jump ahead to the valuation. What are we paying? Well, we know that the company is losing money, so we don't have any PE to really lean on. So then we look at price to book, and at 9 times, that is a lot. Given that we're trading at 13 times sales and only have about, we saw 11% in the most recent quarter, but we're going to adjust up to about 18%, so that's good. And we can see here that margins have dramatically improved over the last 2 quarters. It went from 14% negative, 13% negative to just about 1%. So the profitability flip is coming here, and that will put it on a lot more radar screens for big-time investors. All right, so if we look at the chart, this stock has just been held in a channel here, right? I mean, at the low end, about 15, at the high end, a little bit south of 35, probably 32. Hard to see with all this setup, but it looks like it's coming back. It looks like it's headed back up. So we've got estimates, big growth in these lines, right? So that tells me that there's good earnings growth coming. All right, so that's Globalstar. GSAT. All right, the next one is going to be Vimeo. Vimeo, the alternative video playing platform, VMEO. Zach's rank number buy. It's a strong buy. It's a B for growth and a B for value, so maybe something for the value conscious people. $700 million market cap and trades over 1 million, well, about 1 million, almost 1.5 million shares. So they have that video platform, kind of like a YouTube in a way, but a good deal smaller and a little bit more instructional and private. So if you want to have these private video things where people see your videos, but they can't really do much with them, this is a good platform for you. All right, so let's take a look at the numbers. Huge beat, a miss that's a little disappointing. This is a beat as the loss was smaller than expected. And this was actually a huge beat when they reported 4 cents. And, well, no. Sorry, it was just a miss. Or meat. I dyslexia. I did it. Went to my visual cues there on that difference 0. So okay, earnings history, but the important thing is what's happening next, not what happened last. This number has moved up from a penny to 2 pennies, 2 pennies to 4 pennies, 1 penny to 6 penny on the annual numbers. That's a big move there, and then 5 to 9. That is really great to see. So the earnings estimates are moving in the right direction. Where's the growth? Where is the growth? There's very little growth here. at 1.5% this year, but we're looking for a full 5% next year. I like that there's a growth acceleration. I'd love to see a lot more growth than what they're showing. All right. What's the valuation? And this is where the rubber hits the road here. You've got a 66 times forward earnings multiple, which is a ton. But price to book is very low. That's going to keep the value people interested. And price to sales is very low. And as we can see, no growth in margins. Oh, that's going the wrong way. Was at 6, moved to 4, now to 3. So we need this stock to turn it around, get a little bit of operational efficiency, earn more money on the top line, and spend less throughout and make more on the bottom line. So that's my simple advice to them. Of course, basic understanding. So we take a look at the chart, and this stock came out and people thought this was a great alternative to YouTube. It just really hasn't worked as well as they thought. And the stock has been left for dead here around $5, even as estimates have, more or less trended higher. Hard to see. This one's going to need to wait a little while. So it's going to be on the radar screen, but it's something that we'll have to watch and wait for, because I want to see a couple good quarters where there's good margins and good top line growth. All right, that's it for this week. Be sure to join me next time when I take a look at 2 stocks for your aggressive growth radar screen. Until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.